Dear viewers, welcome to this special episode of Expert Speaks. We saw a severe sell-off in the markets during the first few days of April, and the Black Monday, April 7th, we saw a massive sell-off even in Indian market. It's just not restricted to Indian markets. Even the global markets went through a very heavy sell-off. Investors are concerned. They do not know what's going on. There is a lot of talk about tantrums by Trump about his tariffs, what kind of an impact it will have on your portfolios, what might happen to the stock markets, what is the action that needs to be taken today, either to save your profits or to make most out of this opportunity created by a severe sell-off. I have invited to today's episode learned guest faculty, Mr. Sheetal Malpani. He is going to talk to you about everything about what exactly is happening in the stock market and the action that you need to take at this point of time. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, to talk about the sell-off in the market and a good perspective of what lies ahead in future, what changes are brewing, and how investors should position themselves, let's talk to Mr. Sheetal Malpani. Sheetal Malpani is Chief Investment Officer at Tamora Investment Managers, a person with enormous amount of experience in the stock market, a researcher himself, an eloquent speaker. You have heard him before on our channel. And when he speaks his mind out, we are all the ears for him. And let's see what he has to comment on the current sell-off. Welcome to this episode, Sheetalji.
Thank you, Dr. Bhatt, and thank you for having me.
Sheetalji, we saw this massive sell-off in the first week of April. And even for seasoned investors, it's not something which is easy to digest. When global markets fall by 5% per day consecutively for 3 days, when you see Japanese market falling by 10%, US markets falling by 5% or more than that, S&P, Dow Jones, Nasdaq, all put together, it's not something which somebody can take it without notice. People are concerned. Why this sell-off? What exactly went wrong? Can you take through a crisp commentary of what happened in the market?
So I think it is well documented that Mr. Trump tariff tantrums has led to the market downfall. To put it mathematically, if you look at Trump has put out an additional tariff which will collect near about 600 billion odd, assuming status quo, other things remain same for the US. This means this 600 billion either is coming from US consumers or it is going from the countries which are exporting to US. So assuming this 600 billion is coming from producer or US consumer, that means this is going to the US government. And if you go to the multiple of 10, 15, near about $10 trillion of market cap could have been eroded, and which has been eroded last 2-3 days from the global market per se. What it has done is that it has disrupted the trade things which has been there for the last 30, 40 years. Now people are uncertain and companies are uncertain in terms of what should be the currency rates, what should be the pricing, so on and so forth. And then that is where the market doesn't like uncertainty, and market has taken cognizance of it, and it has corrected across the globe near about between 5 to 15%, depending upon what kind of country you are in terms of whether you are export-oriented countries like China and Hong Kong and Taiwan and Japan. They have corrected far more in terms of steeply, near about more than 10%. Countries which are more domestic oriented, countries like India, they have seen a correction of 5 to 7%. So this is what has happened. Yeah, yes, and the US market, especially the US tech, has seen a sharp correction because the valuations were higher, and the B, because of its tariff tantrums, the chances of US entering into a recession has increased big time, and that is why we have seen the growth stocks, which is basically the technology stock, has seen a sharp sell-off. Yeah.
Sheetalji, you have been a keen observer of market. You have seen how Trump performed during Trump 1 period, and you see he comes back with full aggression in Trump 2 version. Have you seen really any ground changes, the realities on the ground which have changed ever since Trump has come into the scene in Trump 2 version?
He has been far more aggressive in this Trump too. The political capital with Mr. Trump is far higher at this point of time. He has majority all across in US. So I think he has been far more aggressive. He has experience in terms of dealing with countries on tariffs. He has under the Trump one. Under Trump one, he was far more in terms of between two, three countries. He was very much focused on China. But I think this time around, he is very much focused all across the trading partners, even the friends partners, the countries like Europe, Israel, India, which have been good trading partners for US. I think he has been very, very vocal about that. Everybody has to give their share of tariff revenues. US has been at the receiving end because of the state deficit. Under Trump one, I think the debt to GDP ratio was far lower and the interest rate was far lower. So there are three things which are not there, which was there in Trump one. Interest rate is far, far higher than what it was under Trump one. The debt to GDP is far, far higher because during COVID, US government put a lot of money. So the debt to GDP has risen. So these are the two things which is making sure that Mr. Trump becomes far more aggressive to make sure that they raise revenue from every means. They reduce cost to make sure that the US fiscal condition comes far more into sanity levels than what it is currently.
Sheetalji, in the last 30, 40 years, the developed world, both US, the Europe, everywhere, were the beneficiaries of multilateral trade arrangement. They were great believers of free trade. So they had this problem of inflation on their hands, and that has been countered quite very well by imports from cheaper manufacturers like China, Far East. As a result, the West kept their inflation down, interest rates down. The Far Eastern economies, including China, had a massive growth. But each action has its consequences. When you try to achieve certain, it will have a side effects as well. First thing we observed was in Eurozone when Great Britain broke out of it, the Brexit, the famous Brexit, telling that we will mind our own ways. Now here comes Trump, whatever could be his compulsions. He says, I'm walking out of multilateral. It's literally a diktat. And say, no more multilateral free trade. Let's negotiate a bilateral trade agreement with whichever country which wants to transact with the US. So it's a tectonic shift in the economic landscape. As an observer of the market, how do you see the economic landscape of the world change from here onwards?
So, Mr. But if you look at, I think the whole world was a beneficial of globalization. This globalization theme started post World War II, when America was, I think, doing okay, and our Europe economy was in tatters. So, in terms of America took the lead to make sure that it becomes a superpower, and it told the other countries that, okay, I'm in good shape. I will import a lot of goods and services from you people. And I think US dollar became the de facto currency. And so it made it easy for US to import cheaper goods from other parts of the world, while the US itself making sure that it focuses on defense, technology, and so on and so forth. That is why if you look at the last 30, 40 years, most of the innovation on the tech side came from US. And I think the benefits of US consumer also got benefited from low prices of consumer goods coming from countries like Europe, Vietnam, India, and China, and so on and so forth. But I think US today feels that somehow because they have been running a large current account deficit, it has come to a point where the currency, which the reserve status of the currency might get under caution. Mr. Trump feels that American economy has been shortchanged because a lot of manufacturing jobs gone out of US. American employment is not there. His motto that make America great again can only be regained if either the American manufacturing again gets built up, jobs again shift to US. But I think this understanding is unfounded because I think the price point at which US will be able to give employment to its people will be far, far higher. And if US is able to bring some of the manufacturing to its base, it will lead to a lot of inflationary condition, and US consumer might have to pay higher. It will lead to a lot of trade barrier. But I think Mr. Trump feels that this is the way the world has to behave. They have to make sure that their trade deficit gets reduced. So I think it's a price. If every 100 years the world order gets changed, it was for Roman Empire, then British Empire, then the post World War II. I think it is an American empire. Though it is too early to call whether the globalization is broken or not. Yes, but if you look at most of the countries as on today, I think they are looking inwards. Like India is also promoting "Make for India" or "Made in India" kind of campaign. Europe is also focusing on making sure that they become self-sufficient in their defense requirements. America is talking about "Make America Great Again." In that sense, I think the globalization which we have seen, I think we will see in some different form. As you have said in your caution, that it will be a two-way trade agreement rather than a multi-trade agreement at this point of time. So difficult times to go by, uncertain times to go by. But I think my sense that some clarity will emerge in next 2, 3 months. I think some of the trade deals will get negotiated. The world will find a way where trade can happen between countries. It may not be as freely as it used to be in the last 30, 40 years. There will be some tariffs here and there. US is the largest trading partner for most of the countries. We have to find a way to deal with them, maybe at a higher tariff rates. There will be a lot of negotiations. Some of the goods which can be imported from US by their trading partners, they have to import. So there will be a lot of ifs and buts. With the free movement of goods and services, what we have seen in last 30, 40 years, I think it might get dampened. And but I think it is not an end of globalization per se. But yes, tough time ahead for all of us, and uncertain times will be there. I think the dust should settle down in next 6 to 12 months, as and when Mr. Trump starts to negotiate deals with large trading partners, mainly EU and China.
Now, our interest is the Indian economy. For Indian economy too, when the tariffs are raised and the new barriers are raised, it can't be a normal life as it used to be yesterday. In your opinion, how does India get impacted because of these changes? Does it affect the Indian GDP? If it gets affected, to what extent it might affect?
So, Mr. Bhatt, there will be two answers to it. I think since most of our viewers are linked to stock market, so I will give two answers to it. The Indian GDP will be largely insulated from what is happening. It will get insulated. Our export is minuscule to our overall GDP. It is near about only 10-11% of India's GDP. So in that sense, it is far, far lesser than uh, other countries, especially China, Vietnam, and so on and so forth. Our domestic consumption is far, far higher as a percent of the GDP. So our GDP will get impacted, but to a very, very small extent. I think maybe a 50 bips GDP shave off will come through, not because of this tariff, because what is happening across the globe. I think global GDP will get impacted far more, and the impact of that will come to Indian GDP. On the stock market side, I won't say the impact will be as small as what it is on Indian GDP, because I think there are a lot of interlinkages between the financial markets, and a lot of India's earnings do come from export-oriented sectors. Maybe not directly, but very indirectly also. So if you look at Mr. Trump is only talking about tariff on goods, but I think large part of India's export is services. Now, services do not get impacted directly, but it gets impacted by the countries to whom we are exporting. So, if US sees a recession because of this tariff issue, large part of Indian IT services are linked to US economic growth. So, it is not a direct impact; it is a second order impact. Then, if IT services get impacted, a lot of other things also get impacted. I just give you an example. Indian IT services employs near about 5 million people directly. They have a wage bill of near about 120 odd billion, of which 100 billion is in India and 20 billion maybe on for the employees offshore who are working offshore. And this has a multiplier impact of 3 to 4 times. So near about 15% of India's GDP might get impacted because of this slowdown. They may get lesser raises, the net hiring may be lower. So I think in that sense, market will see a far more impact, stock market, than Indian economy per se. But yes, 50 bips lesser GDP growth is more likely because the corporates might defer their capex plans. They might wait and watch. what happens to our currency, what happens to ultimate trade negotiations between India and US, what are the trade negotiations which is happening between India, US and China and other countries, then they might chalk out their plan in terms of which kind of products at what prices can be sustained, what kind of capex need will be there, what kind of supply chains are shifting to India, what kind of products make sense for India, where we can gain market share. So in that sense, I think it will be a wait and watch scenario. Last year was a slowdown because of election issue. This year might be a slowdown because of uh, tariff issue. And I think next year, I think we might get a better clarity in terms of how the GDP growth rate might progress from there.
When tariffs have been imposed by Trump administration, each country is responding in a different way. We saw aggressive response from China. We have countries sulking, countries which are confused. How do you rate or how do you see the response of Indian government to these tariffs? Are they in a fighting mode, aggressive mode, accommodation mode, or trying to see how best we can improve our trade ties? As an observer of the market, what have you observed? Also, I want you to tell to the audience in the following months and years, what could be the best thing that happened to India or the worst circumstances which might pan out from here? The case scenarios as you expect as a fund manager.
If you look at this point of time, while China has retaliated that they will be putting so much tariff back on US, but I think India is doing the right thing by waiting and watching and trying to do a backdoor negotiation. Whatever our understanding, whatever we are reading on papers and on news media, is that there is a backdoor negotiation which is happening. These type of trade deals do take time to mature. It might take near about 6 to 9 months before I think India and US might have a eventual trade deals. If you look at on the 12 countries where Trump has put a higher number of duties, China, European Union, India, Vietnam. I think 2, 3 countries have retaliated. Why China has retaliated? We must understand is that they have a trade surplus on export side, but they have a trade deficit on services side. We have a trade surplus on both goods and on services. So I think if we try to retaliate, then there might be issue on services which might come through. So I think Indian government is trying to do a good thing. Like I give you a case an example during the Ukraine Russia conflict, where whole world was against Russia in terms of trying to put in sanction. We were very equidistant. We took our time. We negotiated a lower oil price with Russia. We made sure that we do not rub other Western countries on the other side. I think Indian government is following a wait and watch policy, trying to do talk because I think put to put a retaliation. I think Trump will do another retaliation. So it will be a downward spiral. And I think at this point of time, I think we should not enter into such kind of retaliatory mode and wait and watch. And I think if some of the countries are who are retaliating, we might be end up benefiting because Trump might has to do a deal, bilateral deal with some of the countries. And if we are good enough to negotiate, I think we might end up having a better deal with them, and which might help our country to gain market share in some of the products and some of the export which has been doing to US, where the other countries who have been retaliated might face eventual far higher tariffs than what is proposed currently.
So, going by your words, I get an impression that probably India is doing the prudent step of waiting and watch or trying to do a backdoor trade deals and trying to see whether it can benefit from the whole confusion which is happening between different countries. It looks to be a prudent
According
policy at this point
Yeah,
of.
I think according to me, I think right now, I think it's too early to put up a retaliatory tariff. I think Trump has given a time till 9th when this tariff will get effective. I think backdoor channels see Mr. Trump has been there in the office for the last 2, 3 months. So talks must be still on. There must be a lot of grounds. If the deal would have been to do a trade to negate the trade surplus, India would have imported more oil and some other stuff. But there is more to it, more to these tariffs, just not getting away with the trade deficit. There is more to it in terms of geopolitics and other stuff which we are unaware about. But I think it is good to be on talking terms and rather not put a retaliatory or tariffs which some of the countries have put through. And I think make sure that because I think we have a large services exports to US at this point of time, which China doesn't have. So in that sense, it is good. I think we keep talking to them and find a mutually agreeable tariff terms where I think both the countries can get benefit out of this new world order.
Sheetal, you have been a market observer for such a long period of time. Have you encountered such tectonic shifts? Forget about the tariffs, but tectonic shifts, when I refer the major changes that are happening, which will have a material impact on the way the economies will perform in the past anywhere in the world, and how did the world deal with such circumstances? So finally, the world is what it is today from the experience it has collected in the past.
So not in my investing career, I've seen such kind of tectonic shifts, but as in the history it has happened. I think 1930s US put up a tariff, and I think that point of time we saw a 4 year of very bad market where the US economy fell by near about 3 4 years in a row between 1929 to 1933. Then I think post World War there was a realignment of global order where US took the lead of becoming a superpower, becoming the big brother of the world. And then we saw the next 30 40 50 years of globalization and every country getting benefit out of it. So this is something new. I think this is something I think as nobody saw the pandemic, they have read about it. As I think nobody has seen actual tariff war. We are right now we have read about it, but we have not seen it happening in front of us. This is new to us. I think economy will find a way out in terms of dealing with it. It is a period of uncertain times for economy, for markets, for financial markets, for everyone around us, especially people who are running small businesses and especially exporter-oriented sectors, because they don't know. I think in terms of what pricing, what currencies will, how currencies will behave, how their competitor countries whom tariffs have been put, how they get negotiated, so on and so forth. So supposedly, if I'm a textile exporter, X number of tariffs is put on India, and my competition who is in Bangladesh, there is a tariff. Now, if Bangladesh is able to negotiate a tariff or India is able to negotiate a better tariff, we can gain market share, we can lose market share. So there are a lot of ifs and buts. There are no final answer at this point of time. As I've said that I think it is time to for the government, especially to negotiate it and to find a win-win kind of a situation where I think our trade deficit with US, uh, I think US is able to find a logical answer in terms of where we can import more items from US, which we are importing from some other countries. And I think agree to a tariff rate which is manageable from Indian perspective.
The net effect of all these changes, the uncertainty about the future, will reflect on the stock markets. And the world, or particularly the investing community in India, have seen a massive bull run in the last 3 4 years. And they believed that it's going to be very good times forever. And suddenly the rally has been halted. And how do you expect the Indian markets to behave from here onwards? Will there be more downslide to come? Will the markets move in a sideward band, or over a period of time, a creeping up move will happen? What is the reasonable expectation an investor must have in their mind now before they invest into the markets?
I think post-COVID, we saw a one-way run, and I think the one-way run was led by a lot of earnings growth which came through, and I think that earning growth peaked out in at the end of the last March 2024, and there we saw the peak. The market obviously was running through even in the first half of FY25. Then when the eventual slowdown because of the election-led spending which was not there from the government, market saw the correction in the first phase. Now, as market was coming to the terms that okay, GDP growth has bottomed out and next year might be good, this tariff issue has come through. So my sense is that I think if we see that eventually, I think this will be the base case that GDP growth will slow down because of this tariff issue globally, and I think India will be impacted, but to a lesser extent. The earnings growth expectation for the next year, which is near about 12 13%, will eventually come down. Our multiples are a little bit higher than if you look at our last 10-year averages. We are trading at a higher multiple than other emerging market countries. So in that sense, I think we might see some correction, not because of this tariff issue, is that equity risk premium. Whenever there is an uncertainty, the premium equity risk premium goes up. So in that sense, we might see a time correction and a little bit of price correction for another 6 to 8 months. And Mr. But it all depends upon at what terms the tariff negotiations happen across the world. If they come to a reasonable level, then from there on, I think we might see the up move starting. But at this point of time, the earnings expectation is very meager, near about 8 10% according to my mind for the next year. And on that earning, we are trading at near about 19 times, which is 10 12% higher than our mean levels. So I think we might consolidate or might see some volatility depending upon the news flow for the next 6 months. And from there on, how it goes in terms of India's favor and how other things behave, I think we might see the next leg of run from there on.
So what's your message to the investing community at this stage? How should they handle the situation? How should they act? Should they invest? Should they stop? Should they stop their SIPs? Should they walk out of the market? As a fund manager and an investor yourself, what message you would like to give to the investing community?
I think in uncertain times, I think news flow won't be good, but I think you will get a reasonable amount of valuation. So if you look at in last 1 year, we have seen a correction of near about 3%. If I look at from the last April to this April, we have seen a 3 to 4% correction on Nifty, while our earnings growth has been near about 11%. So like to like, we have seen a near about 14% correction in valuations from here on. So in another 6 months, if I assume that our earnings will go at 5%, and even if we remain here, we will see a near about 20% nominal correction, not in absolute prices, but in valuation, we will see a correction in that sense. From there on, I think eventually the dust will settle down. Our economy has bottomed out from our domestic issues. So we saw in last year, Mr. But there were three issues. There was a monetary regulatory tightening where NBFCs were put on hold to lend to fresh set of segments, especially on microfinance and personal loans, so on and so forth. Then there was a fiscal consolidation which Indian government was going through, and there was a monetary tightening also. Now, out of these three things, I think two things are on the ease. I think we are on the monetary cut cycle. I think we have already seen a 125 bips of cut. We might see another round of 25 bips cut incoming RBI policy. The regulatory easing has started, where I think a lot of issues which was there. I think RBI is now, I think, easing on the regulatory side. On the fiscal side, I think our consolidation has been done in some sense, and I think because of this tax cut on 12 lakh. I think a lot of more money will come to individual hands. In that sense, our domestic economy might see a leg up, which will get negated because of this tariff issue on the manufacturing side. So in that sense, I think in next 6 to 8 months, I think we should see better times. There is no point of exiting the market at this point of time. Our valuations are 10% higher than the global averages or 10-year mean valuations. But I think it is no way which is very, very expensive at this point of time. These are uncertain times, but when we navigate through these uncertain times, the next round of economic up cycle, we might see a good returns from here on. But sitting today, I think the expectation on 10 to 12% return on headline indices is reasonable expectation, barring the first 6 months, which may be a little bit volatile. But I think investors should make sure that they use large amount of drawdown, which is based on global news flow, to add on to their equity positions at this point of time.
Italji, thank you very much for simplifying the whole activity which is happening in the stock marketplace and helping the investor uh, to design what he needs to be doing at this point of time, not to succumb to the panic, not to find the exit door, but just by reading the headline in news or watching the television shows. Thank you very much for educating the investors. We remain in gratitude to you for your kindness to come and spare time for the benefit of our viewers. Thank you very much, sir. Dear viewers, hope the video that I have done today helped you to understand what exactly is the effect on your portfolios, what you need to be doing. There's a lot of noise here, but the expert of the day, Mr. Sheetal Malpani, would have helped you to understand what you really need to do. If it helped you to understand the current turmoil in the market, do give me a thumbs up. Many of you watch our videos, forget to subscribe to the channel. We grow because of the subscription of yours. Please do subscribe to the channel and hit the subscribe button right now and press the bell icon. Do not forget to share these videos with your near and dear ones, friends and relatives, and on all the social media on which you are connected with. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you soon with yet another expert, with yet another topic, very, very soon. Thank you very much for watching this episode. Jai Hind.
Press the bell icon for more details and subscribe our channel.